Ever wonder what's really going on under the hood of a retail giant like Home Depot? Well, we're about to find out. We're going to break down their latest earnings report, and I promise we'll make this dive into the numbers a pretty fascinating one. Let's get right into it.
Okay, so think of this as the cheat sheet for everything we're about to cover. Now, there are a lot of numbers here, but see that Q4 sales figure? It's down 3.8%. That little negative number is a huge clue in the story we're about to tell. But before we solve that little mystery, let's zoom out.
So let's start with the big picture. Before we get caught up in the details of any single quarter, let's see how Home Depot did over the entire year.
First up, the big one, top-line sales. Home Depot pulled in a staggering $164.7 billion. I mean, to put that in perspective, that's more than the GDP of some entire countries. And it's up 3.2% from the year before. So yeah, even with the economy being what it is, they're still finding a way to grow.
So they made a ton of money. But what's the bottom line? How much did they actually keep after all the bills were paid? Their net earnings, the pure profit, was a whopping $14.2 billion. By any measure, that's a fantastic year. But, and this is where it gets fun, there's a really interesting twist in this story.
So the full year looks great, right? But when we zoom in, I mean really zoom in on just the last 3 months of that year, a totally different picture starts to emerge. It's kind of like a tale of two different time frames, and honestly, this is where things get really interesting.
And here we are, at the central puzzle. We just saw the whole year was basically a home run. So, what gives? How could a company have such a great year overall, but then see its sales drop by almost 4% in the final quarter? It doesn't quite add up, does it?
Well, the answer, believe it or not, comes down to something super simple. The calendar. Yeah, that's it. See, the fourth quarter of the previous year actually had an extra week in it, just one extra week. But that single week was worth about $2.5 billion in sales. So that drop we saw, it's not really about performance at all. It's just a quirk of the calendar.
So, if the calendar can throw things off, how do we get a real picture of a retailer's health? Well, analysts use this metric called comparable sales, or just comps for short. It's pretty smart, actually. Think of it as comparing apples to apples. It only looks at sales from stores that have been open for at least a year. That way it cuts out all the noise from new stores or, you guessed it, weird calendar stuff like an extra week.
And here's the proof in the pudding. When we look at those comparable sales, the real story comes out. Home Depot is actually growing. Comps were up 0.3% for the full year, and get this, they were up 0.4% in that supposedly down fourth quarter. So, what looked like a problem on the surface was actually pretty solid underneath.
Okay, so we've crunched the numbers, we've figured out the calendar quirk. Now let's hear from the person in charge. How does Home Depot's leadership frame these results?
Here's what CEO Ted Decker had to say. You can tell he's proud of his team for gaining market share, for getting a bigger slice of the pie. But he's also not sugarcoating it. He points directly to consumer uncertainty and pressure in housing. And that's a huge deal, right? When people are a little nervous about their jobs or the economy, they tend to put off those big projects, like redoing the kitchen. So he's basically saying, hey, we're doing great, but it's a tough world out there.
All right, so Home Depot is navigating some choppy waters. But what does all of this mean for the people who've actually put their own money on the line, the investors? In this kind of climate, are they still getting a return?
One of the main ways companies reward their investors is through dividends. And Home Depot is doing just that. They just increased their quarterly dividend by 1.3%. For an investor, that's literally like getting a raise, just for owning a piece of the company. It's a powerful signal that they feel confident about the future.
But here's the part that's really impressive. This is the 156th quarter in a row that Home Depot has paid a dividend. Think about that for a second. That's almost 40 years of just consistently paying out. It's like a financial metronome, just reliably ticking away every 3 months. That is the kind of rock-solid reliability that long-term investors dream about. So, that was the year that was. A little complicated, a few twists, but ultimately a really solid performance. Now, let's turn our attention to the future. What's Home Depot's game plan for the year ahead?
Here's their blueprint for next year. And you can see they're not promising the moon. They're forecasting modest sales growth, relatively flat to slightly positive comparable sales, and opening about 15 new stores. It's a very conservative plan. They're signaling a year of steady, controlled growth, not a home run. And that leaves us with the big question, right? In a world filled with economic uncertainty, is this steady-as-she-goes approach the right one?
Is being safe and modest enough to keep building the empire, or will they need to take bigger swings to stay on top? That is the billion-dollar question that we're all going to be watching them answer in the year to come.